Hi there, welcome to Kneppy Invest. Confession season can be quite traumatic for shareholders. This is the time of year when companies put out trading updates. And today, on May the 10th, Appen was one of those companies that released a trading update. And a lot of times you will see the market react quite violently to these trading updates. Hopefully, if you are a shareholder of one of these companies, they release a positive trading update and then you can see the share price rise 10, 12, maybe even 15%. But if a company releases a negative trading update, like Appen did on May the 10th, the market will absolutely punish that company. In fact, the share price for Appen is down 28% on this day because of a negative trading update. So in this video today, I'm going to look at this particular trading update and just see why the market absolutely hated it. Appen released their announcement at 8:57 a.m. The announcement was actually titled Trading Update, Cost Reduction Program and Strategy Refresh. So whenever I see a company release a trading update, no matter if I'm a shareholder, a non-shareholder, or even if I don't follow the company that closely, if I see the words trading update, I will always have a look at that announcement. And that's definitely true for Appen because of what the share price has done over the past 2 years. Share price has fallen from, say, about $40, $45 all the way down to less than $3. And then I opened up the trading update and it was not good looking. So I've already opened it up here. Now, the main things I'm looking for when I do read the trading update is language and numbers. Now, you might think that when a company releases a trading update, the management is going to be naturally positive and buoyant and put a spin on things. That's not necessarily true. The company management needs to be as truthful and as honest and transparent as possible. And Appen have done that in this trading update. So the first thing I noticed here is in the third paragraph, when they mention the challenging external operating and macroeconomic conditions that were noted at the financial year 22 results have persisted in financial year 23. For those who don't know, Appen results, or their financial year is the same as a calendar year. So they release their full year results in February. They'll release the half year results in August. So those challenging conditions, as they mentioned in financial year 22 results, have persisted into the first 4 months of financial year 23. And as a result, Appen provided the following financial year 23 financial update for the first 4 months of the financial year. And these are not pretty numbers. So again, I'm looking at language, and in that paragraph itself, you don't need any numbers. You just know that they are a little bit pessimistic, a little bit wary, a little bit conscious about the conditions right now that this company is facing. But these numbers are pretty ugly. Revenue of 95.7 million, down 21.4% from the previous corresponding period. Gross profit of 35.8 million, down 24.7% below the previous corresponding period. And underlying EBITDA, excluding foreign exchange, of negative 12.4 million. I think this is the big one. So negative underlying EBITDA. That means this company is so far in this financial year loss-making, because if you go from EBITDA, negative EBITDA, you can't be profitable because they're not including interest, taxation, depreciation, amortization. And I can guarantee you this company has a lot of those, particularly depreciation, maybe even amortization. And in the previous corresponding period, this company had a positive underlying EBITDA of 7.9 million. So that's the things I'm looking for in this particular trading or any sort of trading update. Now, they go on about renewed focus on operational rigor, talking about cost savings. They also mention here the expected to deliver about $36 million of cost savings. Now, I'm not the biggest fan of companies becoming profitable again by cutting costs. It's a short-term fix. So that's the question we have to ask ourselves. Are the problems that Appen is facing right now because of these negative macroeconomic conditions and they're not really structural? Or are these problems that Appen are facing right now structural to the company. And if they are structural to the company, even these cost savings of $36 million won't help the company. They've also mentioned here that the first full year impacts of these measures, these cost savings, won't be expected to be achieved or felt until financial year 24. And they all think, say, somewhere here, they also mentioned they have $27 million of cash. So the cash balance at the end of April was $27 million. And that could be concerned if they are burning through a lot of cash, that eventually Appen will have to do a capital raising, particularly if these sort of macroeconomic conditions continue for a while. And then they get into their strategy. They talk about long-term growth and revenue diversification. Now, long-term growth is something I look for in every single type of company. I want to see revenue growing through time, and they're talking about how they're going to achieve this is by diversifying their revenue streams. And one of the problems Appen has faced in the past is a lack of diversification and a very concentrated revenue streams coming just from a few of their biggest clients. So it seems like they want to diversify that. They want to move into different areas, and they go on about talking about AI. They even mentioned ChatGPT. I am not sure if this will help Appen in the long run. So even though they are talking about this, they still have to execute their plans to diversify their revenue streams. And then they go into, they talk about, they made an announcement in regards to an agreement with NVIDIA, but I sort of skipped all that. But I just wanted to look at their outlook. And again, I'm looking at language, all about language. And a few words you don't want to see when you do read any sort of outlook is headwinds. And you don't really want to see, we expect revenue to decline materially in financial year 23 compared to financial year 22. So I think the outlook in itself is one of the reasons why share price of this company fell 28%. And they were a little bit positive at the end here. Should current conditions persist throughout the year, we believe the initiatives announced today will result Appen exiting financial year 23 with return to underlying EBITDA and underlying cash EBITDA profitability on an analyzed run rate basis. But I think the damage has been done by a pretty bad performance in the first 4 months of the year and a fairly negative outlook when you look at some of these words they use, headwinds and revenue to decline materially in financial year 23. So this is why share price down 28% for Appen. Let's have a look at the chart for Appen. Now, let's have a look at the weekly chart first, because this is one of a fairly typical pattern we have seen in many tech companies, not only in Australia, but also overseas. This sort of Matterhorn pattern, which I have come up with myself. This is my own pattern, I suppose, where share price has gone up the upside of the mountain. Share price for Appen went from, when it listed, would have been 50 cents or so, to a high of almost $44. And that high of $44 was in the August, sort of, it's like the third week of August 2020. So this company really took off in the last half of 2020 after COVID-19 financial panic. Now, during this massive run-up, from when they listed back in early 2015 all the way through to the high in the share price in 2020, this company released quite a few profit upgrades. And that's exactly what I want to see, profit upgrades. And that's one of the reasons I took a position in this company. And fortunately, I sold out most of my holdings in this company just to take profits, because I didn't really think this company was a high quality company. And I think the market was getting a little bit ahead of itself when the share price got up to about $44. And ever since that high of $44, the share price has just kept on dropping. And not only that, the company keeps on releasing negative announcements. So if we look at the daily chart, we'll go back to that far, and we've seen quite a few days where the share price has fallen significantly. And really starting off in February 2021, there was one day the share price dropped 12%. Another day, the share price dropped 9, 5, 12%. And February, of course, is reporting season. So they would have released their full year results in February 2021. Market didn't like it. They also released another negative announcement on the 6th of May 2021. Share price fell 21% that day. Another negative announcement in November 2021. Share price fell 18.8% that day. Let's zoom in a little bit. Another negative announcement in February 2022, full-year results. Share price dropped 28.7% that day, all the way down to a share price of 6 cents, or $6, not 6 cents. There was a little blip up in the share price on the 26th of May 2022. That's when there was that proposed takeover of the company. It fell through on that day. That was the day to sell out if you were a shareholder of this company, because again, they released another negative announcement on the 2nd of August, half-year results, and share price fell 27.3% that day. And it did look like the worst news had been priced in, because the share price had been going sideways since about October, we'll say September, October of last year. So that's about a 6-month period where the share price was consolidating and going sideways. A couple of times it did look like the share price wanted to take off, but because of resistance, because of shareholders who bought in higher prices, they were selling out whenever the share price did take off. We saw that in February, and we've also seen that recently as well. But it did look like the sentiment in this company was trying to shift from highly negative, it was definitely highly negative up until about September, October of last year. And then that sentiment was turning more neutral. And more than likely, all those shareholders who wanted to sell out, who had bought in at much higher prices, probably sold out at this point in time. And it did look like the share price wanted to try and move up into an uptrend. But the share price was really struggling and was quite volatile over the past few days. We saw the share price up, just look at this. So on one day, the share price was down 5%. The next day, up 0.6%, then up 5.7%, down 4.4%, up 3.2%, down 3.2%. And the day before they released this trading update, the share price was up 4.9%. And there's a lot of volatility over those days. So share price going up and down intraday. And I think this was just bulls and bears weren't quite sure about the future of this company. And now, because the company has released this negative trading update, I think the bears have definitely won. Not only that, a very negative one-day candlestick. I'll just zoom in a little bit further. And this is, if you can just see right at the end of the period, share price actually opened up at the high of the day, $2.80, and the share price closed at the low of the day, or near the low of the day, at around about $2.29. That's a very bearish one-day candlestick. Now, if you just zoom out a little bit here, so if I just put the lows here, the last two lows we have seen, the share price closed just above those two lows. So if the share price falls below about $2.25, that would be a very bearish move, and that would be a long-term high, possibly even all-time, not an all-time low, because the share price was 50 cents when they listed. But things are now a little bit more clear when it comes to Appen's performance. This 6-month consolidation period, I think, has come to an end, and I think there is possible more downside when it comes to Appen's share price over the next, not only few days, but also the next few weeks and the next few months. And I could even imagine the share price moving into another medium to long-term downtrend from here. That's all I have for this video today, looking at Appen's really horrible, bad, terrible day, down 28%. If you are a shareholder of this company, I'd love to hear your opinions. Are you going to sell out on the back of this really bad update? Or do you think management of the company can turn things around? Now, since I am a shareholder of this company, I have a fairly small shareholding in this company that's not that of much value. And in fact, after today, the value of my holding in this company has gone down a fair bit. I will be looking for that turnaround. And I need some proof that what the company is doing is turning their fortunes around. And until then, there is no way I am going to add to my position, because who knows, this company could release another profit downgrade in the next few months. So if you have any questions, any thoughts about Appen, I'd love to hear from you. So leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.